Welcome to another S&P Futures day trading recap on an Apex paid account, where I'm keeping most of the profits and none of the losses. You can sign up for your own Apex account with my link in the description and use my coupon code for 50% off the first month and 50% off all recurring months. From now until the end of February, Apex is also offering 50% off all account reset fees. I've been on an absolutely brutal downswing coming into today, and my confidence in my technical setup has been dropping with each consecutive red day I've had. I decided that I'd be extra mindful of having higher timeframe confluence when taking trades today, and set super conservative entries that would risk not getting filled. When I see price energetically shift market structure to be bullish in the morning, I patiently wait for a deep retracement and enter long inside a 15-minute balanced price range that was within the ICT optimal trade entry fibs. There was strong bearish momentum down into my limit order, so when price continued flushing right through my entry to stop me out, I almost wasn't even surprised. My technical setup essentially relied on lower timeframe reversals in the direction of a higher timeframe market structure, and I've come to realize that trying to catch these lower timeframe reversals can be a bit of a fool's errand. This is one of the reasons why I'm deciding not to trade with a setup that was based on the ICT 2022 mentorship model anymore. Stick around to the end of this video where I'll go into more detail about why I've made this decision. With my confidence in this technical setup already at all-time lows, I decided to give it one last chance to redeem itself. After a very bearish morning, I see price push upwards and convincingly reject out of a higher timeframe fair value gap and golden pocket to shift the lower timeframe market structure to be bearish, and I enter short on a retracement up into a 1-minute fair value gap. This time price didn't rip through my entry like the first trade, and it consolidated a bit and seemed like it might reject back down off of VWAP. I even raised my profit target to be more conservative, as I just wanted to secure a win at this point. Unfortunately, this setup just seems to be cursed, and price continued chopping upwards and I get stopped out for my second straight loss of the day, and 8th straight loss in a row overall on the account. As you can see from the day's price action, my two trades that I thought were high probability were just completely off base, and neither of them really had a chance. My trade biases were totally wrong, and I took setups going the wrong direction both times, which has pretty much been the story of trading this account so far. This paid account has now dropped to $48,338, which is just over $500 from the liquidation threshold. My equity curve is very clearly signaling that my technical entry model is just not working, and to be honest, I probably should have seen the warning signs sooner. I was able to come to this conclusion because I've been only taking trades off of this same entry model and have logged all of my trades. I think this really speaks to how valuable it is to stick to a single setup and track all your trades, as it can give you the data required to know when it's time to pivot. So I've been giving some thought as to why my technical setup has performed so poorly over the past few weeks, and I think it ultimately comes down to this. After going through ICT's 2022 mentorship, I took his basic entry model as a starting point and have added my own refinements to make my entry rules as objective as possible to minimize any hesitation when entering trades. In the process, I believe I've oversimplified a very nuanced strategy, and the entry rules I've been using are most likely missing certain considerations that are necessary for high probability setups. So the way I currently see it, I basically have two options. Either I can continue down this ICT rabbit hole and study more advanced concepts such as inducement, institutional order flow, mitigation blocks, consequent encroachment, etc., so I can better understand all the considerations required to determine a truly high probability ICT setup. Or I can scrap the ICT approach altogether and look for a more straightforward and objective technical setup that's easy to identify entries. After reading a number of trader psychology books such as Trading in the Zone by Mark Douglas and The Best Loser Wins by Tom Hugard, I've learned that I need to start taking trades off of what price is currently doing as opposed to taking trades off what I think price will do in the future. Also, both books suggest that with the right trader psychology, even the simplest technical strategies can be profitable as long as they're objective and you consistently follow your rules. After considering these insights, I've decided to stop trading using ICT concepts, as they can get quite complicated and the core of the strategy is trying to predict where price will go based on how the pricing algorithm works. I want to be clear that I still think ICT concepts are incredibly valuable, and I know some very successful traders that trade with his models. But I'll admit that the thought of learning all his advanced concepts is just a little overwhelming for me, and clearly my entry model using his basic concepts has proven to be unprofitable. After doing some research into various other trading styles, some of which were recommended by my viewers, I decided to give price action scalping a shot, and will devote the rest of the month getting familiar with the price action trading system popularized by Mack. It looks like this technical setup of taking trades using stop orders off of two-legged pullbacks is one of the many price action trading techniques taught by Al Brooks, and I'm planning to eventually get through the entire Al Brooks trading course. For now, I'll just learn PATS for its simple entry model and practice it on a fresh Apex evaluation account that I'll be documenting publicly here on YouTube. The tentative plan is to start trading the new evaluation account on March 1st using the same risk rules that I had for the last eval account, which is setting each trade's max risk at $250 and daily loss limit at 2. Since I've already paid the one-time fee for the paid account, I'm going to leave it alone until I'm confident that I've found the long-term edge again, whenever that'll be. I'm not going to rush the process. I'm actually super excited to be learning more about price action trading using stop orders for entries, as I do feel that this style of trading fits me better, as I can take entries off objective entry rules and trade like a robot while sticking to my risk management rules that I've now mastered. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap, which will feature a new method of price action trading. I'll also be posting daily profit and loss updates using this new trading style in my channel's community tab.